Despite having an incredibly successful time in the past decade, Tesla has found itself amidst a turbulent year in 2022. Over the course of 12 months, its share price plummeted by 70% since its peak in November 2021, wiping out approximately $895 billion from their market cap. And this has cost its CEO Elon Musk losing $130 billion in personal wealth and dethroning him from his position as the world's richest man. In addition to this misfortune, Elon Musk's Twitter acquisition also proved to be a costly venture for Tesla, as the company saw $200 billion of its market value vanish since the acquisition. Market analysts believe Elon Musk is partially to blame for the current state of affairs, citing his Twitter activity and weakening demand. His strong influence is being questioned by investors and analysts. Many are calling for him to step away from social media company Twitter so he may focus more on Tesla and save its plummeting stock price. In addition to all of this, all the Tesla bears emerged from the shadows amidst the stock price plunge, claiming to have predicted this exactly. But could it really be all attributed to one person? To find out, watch till the end of this video. Hi there, welcome back to our channel Investing Sense. In this channel, we post videos on latest updates in stock market, cryptocurrencies and what experts' views are. To stay updated, consider subscribing to this channel. Now let's dive straight into the topic. To uncover why Tesla's sudden share price declined, we must dive into what caused this monumental surge in 2020, leading into 2021. Despite the unprecedented events of 2020, Tesla has made remarkable strides in its success story. Its stock price has surged over 20 times since March 2020, making it the first automaker to exceed a staggering $1 trillion market cap and became more valuable than any other major car maker in North America combined like GM, Ford and Chevy. The remarkable success of Tesla can be attributed to a few key factors, from the booming demand for EVs to its innovative growth potential, investors' positive sentiment, and the influential personality of Musk. In 2020, Tesla beats Wall Street's delivery estimates by an extraordinary 20,000 more cars and continued to deliver more than estimated deliveries consecutively in multiple quarters. The company has produced more than 500,000 vehicles for the very first time, and it also began selling Model Y ahead of schedule. On top of that, Tesla's China sales has doubled from $2.98 billion in 2019 to $6.6 billion in 2020. All of this fueled both investors and analysts to believe that Tesla's production capacity would grow substantially in 2021, especially in China, and alongside Tesla had already started building more manufacturing plants outside of California and China, in cities like Berlin, Germany and Austin, Texas. In addition to this, Tesla emerged as a revolutionary force in the automotive industry with its low and zero emission vehicles. As the climate change and emissions regulations pushed the world towards an electric future, Tesla looked primed to remain on top. Furthermore, Tesla's inclusion in S&P 500 index fund later that year has increased the confidence of retail investors and loyal followers of Musk to buy the stock, which helped in sending the stock prices to the roof. All of this contributed to Tesla's sky-high valuation, which made many experts calling Tesla's valuation a bubble. They have argued its valuation is completely mind-boggling when compared Tesla's price to earnings ratio of 1200 with Ford's PE of 22 and GM's PE of 17. As such, it comes as no surprise that Tesla has seen an elevation in market value over recent years. But this doesn't always stand true over time. After 2 years of soaring share prices, Tesla's valuation in 2022 suddenly crumbled due to a series of catalysts. Let's dive into each one of those catalysts. First and foremost was the Federal Reserve's rate hikes in 2022. Due to the unprecedented events of 2020, the Fed has lowered the interest rates to almost zero, which helped consumers and businesses to borrow money at a much cheaper rates, causing the inflation to shoot up. In May 2022, the Consumer Price Index or CPI soared to an unprecedented 8.6%, its highest mark since 1981. By the way, CPI is a measure to calculate the average price change over time paid by the consumers for goods and services, which in simple terms is inflation. In response, Federal Reserve Chair Jerome Powell announced rate hikes aimed at controlling this rise in prices, which immediately sent tech giant stock prices plummeting from their sky-high valuations back to reality, including Tesla. Second catalyst was Elon Musk's massive $44 billion purchase of Twitter has been a bust. To finance this costly acquisition, the tech mogul had to sell an eye-watering $15.5 billion worth of Tesla shares in April and August 2022, leading to immense downward pressure on their stock price. If this wasn't enough though, in November and December he was forced into selling another $7.5 billion worth just to escape being hit with a margin call from creditors who used his stocks as loan collateral for financing his Twitter deal. Tesla investors and analysts were in a state of disbelief with the sell-off on Tesla stock, blaming Elon Musk's Twitter activity for it. On top of all this drama, Tesla short sellers that have been burnt in the past saw a long-anticipated chance to go after weak hands that sold off during this time, which further brought the stock price down. According to Bloomberg, Tesla short sellers made a windfall of $17 billion shorting the stock, the most profitable short trade of 2022. To calm the investors, later in December, Musk tweeted that he will not be selling any more Tesla stock for next 18 months. Coming to the third and most important catalyst that stands out as particularly concerning was the demand for Tesla electric vehicles was not meeting expectations. In an unprecedented move in October, Tesla lowered its car prices by 9%, likely due to decreasing sales and waning confidence that every car produced at their gigafactories could be sold, especially in China due to the recent strict lockdowns. This was a worrying sign for Tesla, which was previously seen as a successful and innovative company. Tesla's EV cars have long been considered a status symbol, but China is quickly becoming the leader in competitive and budget-friendly electric vehicles. In an effort to stay ahead of the game, Tesla recently offered another $7,500 discount across its board models for December 2022, bringing it closer to meeting Chinese rivals on price point. This move was also targeted to bring back customers in the US, as many car shoppers have been waiting on Joe Biden's Inflation Reduction Act, which includes tax credits starting January 2023, saving them even more money in 2022. Even with the discounts or the tax credits, Tesla cars are still very expensive for 80% of the population, costing them $48,000 for a Model 3 car and approximately $65,000 for a Model Y. And with the current interest rates sitting at around 7%, buying a Tesla is still a far-fetched dream for most middle-class population. Moreover, with the recent job layoffs and recession fears, things get even worse for Tesla. Elon Musk himself tweeted suggesting Fed needs to cut interest rates immediately. All this suggests that Tesla is facing a serious demand challenge, as the inventory of unsold cars has doubled in one quarter and there are now an unprecedented number of vehicles gathering dust on their parking lots. Price cuts across 4 countries further suggest that the company can no longer find buyers at full price, resulting in this severe demand and pricing problem. Upon considering all the facts, Tesla's rapid rise in production and delivery over the past 4 years could be facing a breaking point. Its share prices have been steadily declining, potentially signaling an evolution from growth stock to value stock as market demand slows down for electric vehicles, and making it clear that even Tesla isn't immune to economic forces. So, do you still think Elon Musk's Twitter acquisition is the only reason for Tesla's stock price decline? Let us know your thoughts in the comments section below. Thanks for watching so far. If you liked this video, make sure to subscribe for more content like this.